Hey everybody, good morning. Welcome to today's episode of Stocks for Breakfast. Thanks. I got to get into the video. Thanks so much for joining me today. Really excited. We've been doing an unbelievably good job in the community of tracking and following the order flow. But here's the biggest thing. In today's video, we're going to touch on some recent activity in price action, but we're going to combine that with earnings, and we're going to combine that with some existing trades that we have right now to really kind of put the pieces together. We're going to do a little bit of a deep dive today into a coaching call that we had last night. If you happen to not be in the boot camp, one of the things that is really important to me is that when somebody comes in, they know exactly what they're looking at. So we actually have 3 different coaching calls during the week. I'm going to take you behind the scenes into yesterday's coaching call, which is our beginner coaching call, somebody who's new to the community, as well as somebody who is a new trader. So we're going to work on that too. So stick around, but we'll be right back. Oh, and by the way, we're going to be raffling off a Stock Trading Pro hat today. I'm going to tell you how to do that in just 1 second. So be right back. Okay, so we got a lot to cover today in only 30 minutes. We're going to get into it. We're going to get into it really quick. As with everything that we do here, this is for educational purposes, but it's up to you to make that final decision. It's up to me, my mission, to help you make better decisions. And actually, we got a comment there before. I just want to point something out. Let me just find that again. I want to make sure I get to it. So I know Myers is joking around slightly about this, right? But I want to make a comment here because this is really the way that I train people. This is the way that I want you to think. Once you understand what you're looking at, once you understand order flow, once you understand how to read the tape, you actually should expect to make money. I know that's a really strong statement, but when you have a trading plan, when you have an edge, when you understand how to scan for stocks that meet that edge, you should expect to make money every day. Quite honestly, if you don't expect to make money, you shouldn't be putting your hard-earned money in the way of the stock market in the first place. But let's assume that you are okay with accepting risk. Great traders, 6-figure traders, 7-figure traders, and more, multi-7-figure traders, expect to make money every single day. Now, here's where traders mess that up. They expect to make money on every single trade. There's a big difference. When I go into the market every day, I expect to make money as long as we get follow through. But I trade every single position. I see it, I put the trade on. I see it, I put the trade on. That doesn't mean I'm going to make money on every trade. And quite frankly, it doesn't mean I'm going to make money every day. But because I have a strategy, and because I have a trading plan, and because I understand how to read the order flow and read the tape, I expect to make money every day. And it's a little subtle thing, but how many, raise your hand if you've ever seen your signal and you hesitate. You're like, maybe not this time. You can't do that. You have to get to the point where every single time a signal unfolds, you expect to put that trade on. So first, that's one lesson for today. I want to get into this, okay? We just said that we're going to raffle off a hat. So let me just show you what this hat looks like. It's one of my most prized possessions. We have our how do you put that in there? Stock Trading Pro hat. Now, not only do I want to raffle off the hat today, I'm going to raffle it off to 2 people, okay? Now, the way to get the hat today is I also want you to download this. If you go below the video, there's a link to download this Smart Money Footprints. If you can see the title here, How the Smart Money Buys and Sells Millions of Shares to Generate Billions of Dollars. Okay, nice little cover that my wife did. Very proud of that. So here's the thing. I want you to enter to win the hat. We're going to give it out to 2 people, okay? But more importantly is this, okay? We talk about order flow every day. We're joking around about order flow just a little bit before. We're seeing order flow follow through in a big way. I want to touch on order flow, trade management, trade activity, and then we're going to obviously talk about bank earnings today. We're going to run through a bunch of those next. So I want you to download this because this is the structure for understanding order flow. It's the structure, the big picture structure, okay? It's the big picture structure for understanding when we have what's called a markup, when we have accumulation, when we have distribution, when we have a markdown. This is critically important because one of the biggest things in trading is, number one, understanding how to not lose money and respecting risk. I know that's not the sexiest thing in the world when you're looking to buy stocks, but I want to tell you this because it's unfolding in the market right now. And we take a quick look. I'll just put this up. And you can see over here now, the futures are up 33 points. And let's actually just drop down to the 5-minute chart, okay? This is the kind of price action we're seeing right now. I can't stress this enough. And people in our boot camp are probably tired of me saying it every day. But you're not going to get tired of it when it keeps money in your pocket and then this kind of price action unfolds and you are now not digging your way out of a big hole and you're just getting net profitable on the trades that we've been building, the positions that we've been working. And now we're starting to get a big move to the upside because, and here's the thing, this is the whole thing about this. Again, just click the link below the video. All you have to do is opt in for it. And then you'll get dropped into the raffle. By the way, we have 4 different colors. If you happen to win, we can let you, we'll email you and let us know which one you like. So here's the point that I want to get across. If we're looking at the market, and we're going to talk about bank stocks right after this, I promise. If we're looking at the market and we're seeing the market unfolding the way it is right now, let me just pull that up on the chart, make it a little bit cleaner. When you understand the basics of what we talk about here, okay? This, again, there's a lot more to it than this, but this is the foundation of it. When you understand when to be active and when to be in cash, okay, this is a critical thing. We get so many new people that join the community, like, just I've opened my account, I have to trade. No, you don't have to trade. You have to trade when the footprints are obvious, okay? So now our community, which we spend a lot of time, and Minvai's in here right now. Minvai wants a white one. Okay. When we are in our community during the day, we spend a lot of time talking about if there's something to do. Think about what I just said. We probably, and again, there's a lot of members here in our community who can vouch for me on this one. We spend a lot of time talking about if there's something to do and how strong that likelihood of profit targets being hit is at that moment. So we work from week to week, we work from day to day, we work from hour to hour, we work all the way down, if you happen to be day trading with us, minute to minute, where it's critically important to understand that if you keep your money safe when it's not obvious, and let's just talk about this 3-week period here, right? Maybe, actually, no, it's a 5-week period. If you were smart during that 5-week period, and you watch us every day, by the way, I hope that I'm providing value. Do me a favor, smash that like button and hit subscribe. That would mean everything to me. And every day you are tracking order flow with us by sector rotation. If the market's not obvious, like it was not from a bullish perspective during that 5-week period, you do the next level. Remember, the stock market power pyramid is the market lifting everything, which we had for 18 months. Then the next area you go is to sectors, and then you go into industry groups and individual stocks. If you traded smartly during that 5 weeks of selling, you were looking for pockets of opportunity with us in sector rotation and breaking it down into individual stocks. Now that the market is showing a little bit different order flow and some individual sectors are perking up, specifically, we're going to talk about the electric vehicle stocks right now. We've been mentioning Tesla staying above 800. Chinese electric vehicle stocks are bouncing a little bit. We'll get into that in just 1 second. Plus, I'm going to show you topics that we discussed on last night's coaching call that I really, really think would be very important for you to consider. Okay. I just want to walk you through some of the stuff that we discuss at night. Okay. So we want to get into the bank earnings. I actually want to hop on over to that because we've been talking about that. But I think we're going to first, if you remember yesterday, we were discussing JP Morgan and the numbers that came out in JP Morgan. We said it was going to be a little bit challenging for them to test the previous year's numbers. In other words, there was only a 10% target raise from the current levels, and investors needed to determine, was that worth it? Did they blow the numbers out by a big enough number to really move the needle, was the concept that we used. And we actually said yesterday it wasn't. It was okay. It was nothing like, wow, I just can't wait to buy some shares because I think it's going to move more than 10%. And you could actually see what ended up happening to JP Morgan yesterday. So this morning, we have some different numbers out on UNH. UNH, actually, let's actually bring this one in here. We'll start at the bottom here just so that we can really get into this. So UNH EPS 452 versus 441 estimate. Again, the top line number that we're looking at is sales 72 billion, beat the 71.9 estimate. So good across the board. But the bottom line is this, is what we talked about yesterday, which is how they're comparing to last year. And obviously this is in healthcare. So that's a big deal. If they increased their earnings during the pandemic last year, that's pretty good. And the market's actually reacting to that. So as of right now, UNH is up at 414 and change, which is a pretty big pre-market level. So this is a big change. This is a big difference from what we saw in JP Morgan yesterday. So the market right now is liking the numbers in UNH. Now we're going to shift over into a couple of other bank stocks. Actually, Morgan Stanley just announced. So we're going to take a look at Morgan Stanley. Let's see. Hey, Simon, good morning. How's it going? Oh, yeah, that coaching call was hot, right? I'm going to show everybody the topics that we talked about on the coaching call last night. We really got into it last night. Okay, so Morgan Stanley just reported, and now Morgan Stanley's back at 100. Now, I want to give you some feedback on Morgan Stanley. The numbers just got announced. Beat by 324 to 311. So earnings per share beat just a little bit. I like to trade Morgan Stanley. This is one of my favorite. Morgan Stanley and JP Morgan, two of my favorite financial stocks to trade. $100 has been a struggle for Morgan Stanley. So now we're still digesting the numbers. Earnings per share beat by just enough that the stock is up pre-market now. Now, very similar to what we talked about BABA a couple of days ago. Good news by Charlie Munger. The stock gapped open, but if you were really careful and listened to everything we said, we are looking for that stock to hold the bid after the open. So now in Morgan Stanley here, we've already said, because of my experience in trading the stock recently, 100 has been the big level. 106 has been the level that's having a really hard time to get through. So if I'm looking at Morgan Stanley and the EPS beat this morning, I need for it to stay above 100 for me to be interested, based on the fact that I've been trading the stock, and I know between 100 and 106 is the window that the stock has been stuck in. If it holds 100 after the market opens today, then I'll be looking for a first piece of a trade, and then over 106, which would take it into new all-time highs. So it's a little bit of a insider inside my mind, actually, of how I've been trading the stock and the levels that I've been watching around Morgan Stanley. All right, so we're going to walk into some other ones that reported today. We're going to pop these up on the screen and move my face out of the way. Wells Fargo this morning as well. Remember, the big numbers that we're looking for are increase or decrease, moving the needle from a year ago. The revenue numbers, and again, something that we talked about that is really important. We spend a lot of time every day talking about sectors and industry groups and whatnot. Some sectors, some types of companies that don't have products, certain drivers matter. So in other words, certain numbers that come out, such as year-over-year revenue versus subscriber numbers, depending on what you're investing in, you need to know what kind of drivers matter. We call that revisions to expectations for the numbers. So we talked about yesterday with JP Morgan, we're looking for the year-over-year revenue, because it's not like they have inventory on the shelves. That's the top line revenue, and then working that down into year-over-year numbers. So if we take a look here at Wells Fargo, it's a 0.15% decrease in sales over the same time last year. Okay, so that's pretty interesting, right? JP Morgan actually sold off even after good numbers. So it's going to be interesting to see how Wells Fargo unfolds. It's up a little bit right now, but remember, JP Morgan was also up yesterday as well. So not really great numbers right now for Wells Fargo. If they decrease when everybody else is at least beating, JP Morgan beat, but not by a lot. Wells Fargo's revenue decreased, so I would not be expecting that one to rally today. So that would be moving lower down on my game plan list for today. Next, we're going to take a look at Bank of America, and we're going to go right down here to the bottom one. Let's see, 11.49% increase over the same period last year. 85 cents per share compared to 71. So again, something I want to talk about here is a lot of people look at the raw number, but if you really want to up-level your thought process, up-level your game planning process, don't look at the raw number compared to the percentage. And that's all of those numbers. But really the top two that I look at, and I just want to give everybody a heads up on this kind of stuff. We'll get into this in a lot more detail, maybe on a different call. But the percentages change is the big deal. The raw number is good. It sounds exciting, but what is the percentage change year over year? And especially I'm looking at two big ones. The two biggest ones that I look at personally are year over year and then margins year over year. Because again, we spoke about it a little bit yesterday with JP Morgan, and I think everybody raised their hand where we talked about how many times have you seen a company report higher earnings per share, higher revenue, but then the stock goes down. That means that the value driver for shareholders was the miss. And now you need to go stock by stock that you trade. Again, whether it's a universe of stocks or a sector or a group, you need to know what the value driver is for shareholders. And in this particular case, we're looking at margins. Okay. So margins versus sales growth percentage. That's what we're looking for. So Wells Fargo was not awesome. Bank of America actually 19.72%. That's actually not bad. An 11% increase over sales. Now, we want to tie this together because if you think right now about, okay, that's great, 11%, you need to now take it one step further and say, what was the, I'm going to make it so you can see that in 1 second. What was the expected increase if revenue came in at increase? So in other words, if JP Morgan only had a 10% higher target, they had to exceed that in order to make it worth somebody to buy their guidance going forward. So as we're looking at these numbers, we'll do a lot deeper dive into this towards today and tomorrow as we read conference call and transcripts and that kind of stuff. We need to then determine what was the estimate and then what was the number percentage-wise, and that's how these stocks are going to get affected. So it didn't really look like Wells Fargo had good numbers. We'll do a little bit of a deeper dive into that. Bank of America, they actually look decent. Let's see how the market's reacting right now. Up $1, up 2.5%. So a little bit better bounce so far from a percentage-wise in Wells Fargo. Next one, Bank of America. Next one, take a look at U.S. Bancorp. We'll drop this one in here and so everybody can take a look at that. And then next, we're going to get right into what I was talking about last night's coaching call. And we're going to talk about the electric vehicle stocks and why they're at the top of my list today. Okay. So last one we're going to look at here is U.S. Bancorp. Let's see, beat 130 to 116. Sales 5.89 to 5.77. Not really rocking me right now. 12%. 31.3% year over year. That's actually a number to lean your hat on. So let's see how the market's looking. Again, obviously, we need to look at this in a much deeper way. And not really moving the needle here for USB so far. So the numbers are being, so this is really where you really start to dive in. And actually, this is a pretty cool one too, because analyst consensus, it's a 12% increase, but 31% year over year. So now this is why the stock's not moving that much. It's only up 13 cents. Everybody's trying to figure out now, why is there such a big discrepancy, 12% to 31%? So now you dive a little bit deeper into the numbers. Some of them are super obvious, like we just looked at Bank of America and even JP Morgan yesterday. Pretty interesting. Pretty interesting. All right. And last, we're going to actually go up in here. It's not a bank stock, but United Health, which actually we did look at that one already. I want to talk about Domino's actually just reported. DPZ. Let's take a look at Domino's. Down 17%. So 324 versus 311. They missed by a wow. They missed. Okay. Quarterly reporting is only 4.1%, 30% increase in earnings, but they missed. Wow. Okay, so the numbers on Domino's right now are not good. They are not good. They missed. Wow. They missed by $1 billion. All right, that's a big number. Sales of 900. They missed the 1 billion. 997.99 million. They missed what was expected of 1.04 billion. So revenue, top line revenue in Domino's came in bad, and that's why Domino's is taking a hit this morning. All right, so we got a bunch of them just unfolded there. Let me see, Mike. Hey, Mike, what's going on? Let me actually bring that one in there. The document showing, is there a specific source for that? Do you use a specific site for earnings info? Yeah. Well, actually, no, I don't use one specific one. I use probably around 10 different ones, which, by the way, that's actually a good question and pretty important. You could obviously use Earnings Whisper or tipranks.com. You could use Benzinga. Those are probably the top three that I use. And Mike, by the way, inside of the forum, we started to compile a list of top websites that everybody uses, which, by the way, that I want to respect everyone's time. I want to hop right over into electric vehicle stocks, why they're really interesting right now. And then we're going to hop over into what we talked about in last night's game plan meeting, coaching call, so that you can start to think about some of the stuff that we talked about on last night's call. So I want to walk my way over into this morning's email. Let me actually make that a little bit bigger. And first we're going to get into the email, and then we're going to get into the coaching call. Okay. So here's where you start to learn how to put the pieces together. Okay. XPEV broke the downtrend. NIO upgraded to $50 by Goldman Sachs. Tesla still holding firm above 800. Now it's actually up around 814, I think, the last time I looked at it. Ford and General Motors also starting to show some signs of life over the last 3 or 4 weeks. The only one that's not really moving that much is Lucid right now. We'll see. And ChargePoint, CHPT, forming a bottom back above 20. And a lot of people are saying keep an eye on ChargePoint because they seem to be the leader in the charging of this EV big revolution that's going on right now. Okay. So I just want to walk through. We're going to take a look at some of those stocks just to show you what we're taking a look at. So XPEV broke this longer term downtrend. So that's pretty interesting. And it did it on good volume, opening up a little bit lower today. NIO, which had the $50, remember we talked about this the other day, $50 target out from Goldman Sachs. Ford, very exciting to see this stock waking up, pushing a pause, right? General Motors also pushing a pause, pausing now for a couple of days, looking for the stock to catch a bid. Lucid Motors is not catching a bid at all. The stock is just melting. I'm not looking to do anything in this one right now. And CHPT, this is the batch of Chinese electric vehicle stocks. And you can see that it's coming off the mat a little bit, has just barely gotten to the breakout level. And remember what we talked about a couple of days ago, just projecting targets using Fibonacci retracement. So again, we don't want to make this complicated. We want to keep it as simple as possible. The first level we'd be looking for this is around 27 if this forms a bottoming pattern, giving us a chance. Breaking the order flow is just the first step. Okay, that's just the first step. Again, I want everybody to be involved in this. I want to give everybody a chance. Like I said, we're raffling off 2 of our Stock Trading Pro hats. All you have to do is click the link below the video and download this report. That's it. No cost to it or anything like that. I just want you to have that information in your hand, and we're gonna give the hat to 2 people. We have 4 different colors. All right. All right. Next thing I want to talk about is what we discussed in last night's coaching call, because it was actually a pretty good one. Let me zoom this in so you can see it a little bit better. I want you to have the topics here. All right. This is the kind of stuff that we talk about every single day and every single week. And I want to raise your thought process of what's possible. I want to raise your thought process of how to make more money. I want to raise your thought process of understanding how and when to be in cash. We had some pretty awesome topics last night. Now, I want to just bring this up because look, if you're a regular viewer of the channel now, which I hope you are, please hit that subscribe button and the like button. You know that I'm going to challenge you. You know that I'm not going to let you be lazy. You know that I'm not going to let you say, but the market's tough. Tough noogies. Level up your game. Level up what you are looking at. Level up how you are looking at things. Level up with how you are approaching the market. And these are the kind of conversations that we had last night. And I want to walk you through them step by step. All right. So the first thing we talked about last night is day trading versus swing trading, targets and stop losses. I just can't express strongly enough that we get questions, especially from new members that come into the community. Is this stock a day trade or a swing trade? When I do my game planning at the end of every day, which again, usually lasts around 90 minutes. And of course, I teach everybody in the community how to do that. When I do my game planning every day, everything I'm looking for is a swing trade first. Then we go in to read the tape. So the first step is reading the order flow. The second step is then reading the tape. That second part of reading the tape, which is, I could actually show you a chart right now of a stock that we've been trading, and hopefully you participated in, because we've been talking about it pretty much every day. Let me just pull that up for you so you can make sure it's on your radar, which is this one. Again, we've been talking about this stock literally every day for the last week and a half. It's another reason for you to hit that subscribe button. When you're reading the order flow, when you're reading the tape, you need to determine, is it order flow obvious, which, again, stacking the order flow. Then you need to read to determine whether or not it's a day trade or a swing trade. And the difference between the two is profit potential. Now, it should be obvious. So it's pick a side, then pick a spot. Picking the side means you again, download this. You want to have this, okay? This costs nothing. All I'm asking you to do is download it. Once you understand if it's obvious, the next step is to determine what is the realistic profit potential and how much do I need to risk to hit that profit potential. If it comes back where the profit potential is not awesome, but the side is obvious, you can still take a day trade, but that wouldn't be a swing trade. So that's a big conversation that we had last night. So then obviously the targets and the stop losses are now going to be dictated by whether it's a day trade or a swing trade. But the number one priority is whether or not it's actually obvious. Obvious is first. All that other stuff comes after that. If it's not obvious, it shouldn't even be in your game plan in the first place. Okay. We're going to go to the next part of the call from last night. Let me pull that up. And here, how many stocks should be in your list? And I think this is a giant question that a lot of people have. And I want to walk you through this. Pam Hicks actually asked this question last night, and it was awesome. It was absolutely awesome. And the question came in with, should I have 5 stocks? Should I have 10 stocks? Should I have 25 stocks? The real answer, the right answer, again, this is kind of like talking to somebody, how fast should I drive, right? Or if you just started, stay on the service road, don't get on the Long Island Expressway. But if you've been driving a while, you can start to expand what you're looking at. Now, that's the lower level answer. We want the high level answer. We want the answer that is, I want to level up. Again, don't give me the generic, oh, you just started trading, just trade a couple of stocks. That's a BS answer. The right answer is, again, going back to what we just talked about, which is first determining order flow, then learning how to read the tape. The next step is leveling up your trading platform or your stock software. Again, we use a bunch of different ones. I'll post links for that. To set it up where we talked about this yesterday, to determine if you have a list of 5 stocks or 25 stocks. Like my current list for the community, I'm looking at a really big list because I want to call out ideas to the community all day, every day. It's over 100 stocks, but let's just say it's 10 stocks. And let's say you're a swing trader versus a day trader. Once you have your list of stocks, whether it's an industry group or a sector or just a universe of stocks, all of those stocks go into your watch list. Then, and here's the key, this is where tape reading comes in after you've determined that there's order flow. You then need to set up your software so that it tells you right now, at that moment you're looking to place a trade, today's order flow, this week's order flow matches the long-term order flow. So Pam's question, let me pull that up again so you can see it. How many stocks should be in your list and how to manage a big list like a pro is all determined first by order flow. Then you want that list updating as the day, if you're a day trader, and a week updating to let you know which of those stocks meet the criteria in the strongest manner right now. That's how we found NET. That's how we've been trading AFRM. All of these stocks that have been exploding, including APPS and DOCN, those are stocks that have met the criteria. So once you have your software set up, and I really want to bring this home because Ted, one of our members last night, Fred, actually brought this up. Right here. What we do is not hard. Okay, so Fred's talking about what we do in the boot camp. What we do is not hard, provided you go through the training. Using the power of multiple software programs takes 75% of the effort away so we can concentrate on the 25% we really need to. So I want to talk about that for a second. Pam's on the call with us right now. Pam, that was an awesome call question last night. So I want to just ask you this. So think about what Fred's saying here, and this is in reference to what we just talked about on our coaching call. And again, I want to challenge you to level up what you're doing right now. Ask yourself right now, and I say this all the time because I mean it from the bottom of my heart. The trading part of what we do is the easy part. That's formulaic. Entry, stop loss, profit targets, profit maximizer, share size. That's formulaic. The hard part of what we do, the part that you need to learn if there's a gap between where you are and where you want to be, is understanding order flow, understanding reading the tape, and then understanding how to set up your software to spit out the stocks that meet that criteria. The traders that struggle are all over the place. on Reddit looking at what's the top Reddit stock last night, what's the top penny stock last night. I don't do any of that garbage. I don't trade penny stocks. You know what I trade? Where the smart money is flooding and we pay attention to those stocks. So if you just happen to log in right now, click the link below and download this PDF. It's right below the video. And I want to raffle off this hat to 2 people. I want to make sure you have to get in there and fill that out. So does everybody understand what we're talking about? And everybody understand how, again, what I'm trying to do right now is make you think differently about what it means to be a trader. Okay? Thinking about being a trader and acting like a trader is not the same thing. Acting like a trader means that you know what you're looking at. You program your software to spit out those ideas. And then we only need to focus on the last part, which is entries, exits, position sizing, stop losses, and profit targets. I can't stress this strongly enough. Okay. And I'm sharing with you our private coaching call. So I just want to be clear about this. I'm not going to give you the video, but I want you to really think about the topics. You can get, if you come into the community, obviously you can get the video, but so the next thing, and I actually highlighted this, which is a hot topic. It was that good. I was excited about this topic last night. One of the members of our community, and again, we talk about it all the time. Losses don't matter if you understand how to make more and you're winning trades. Okay, so let's put that in context right now. And I'm going to show you a stock that was a really big topic of conversation last night. Okay, losses don't matter. We call them just a business expense. They don't matter if you understand how to make more and you're winning trades. And now we've had a few stocks recently, and I'll pull one up right now, and then we'll get to the stock that we were talking about yesterday. So Net is obviously one of them. ICE is another one that's had some really good order flow recently. But the topic of conversation for a lot of people yesterday was plug stock. And we actually just now determined the stock's actually up another $1 this morning. It's up 28% in just the last 3 days. Let me actually get off the screen there so it's easier to see. How do I do that? Hang on. Okay, so the topic of conversation, and I want to share this with you because it's that important. And I want to inspire you to level up in your thinking. Okay. Oh, by the way, this is what the page looks like, so you can download that just so you know you're landing on the right page. Okay. So the topic that was brought up last night was, we know that losses don't matter as long as we understand how to earn more when we have a good trade on there. Now, the question comes in is when a stock, like we're looking at here, just absolutely explodes. Now, we have 2 different types of profit maximizers. One is a trend. One is for momentum type trading. Momentum type trading is, if you can look from candle to candle, and that most recent price action is going back to my NASDAQ trading roots back in like 2000 to 2006. The question from last night was, okay, the stock is now exploding to the upside, and I want to make sure I keep most of this profit, but I also want to give it a chance to keep going. And this was brought up by David Farris in our community last night. And I sit up in my seat and I was like, wow, this is an awesome question, because, you don't want to get out just for the sake of getting out, because if we would have did that in this stock, 3 days ago, we would have lost out on this. So you need to have some criteria that allows you to adapt what we call a profit maximizer when a stock goes parabolic. But this is where the question got even better, is how do we determine when a stock goes parabolic? So really great question. Again, I get all fired up like this. This is how I get on the coaching calls at night too. This is awesome. This is the whole point of community feedback. This is why I'm challenging you. Anybody who's watching this on YouTube right now, leave a question below the video if something we're talking about is interesting to you and you're like, I just need a little bit more. I don't like, how do I do that for myself type of deal? All right. Now, I can't give you the specifics of how we do it in the boot camp, but I can point you in directions to the concept of how you do it. But here's the thing. You need to now start thinking about if a stock does exactly what we're talking. And again, this isn't a stock from the internet boom. This is this week. Okay. We've been talking about this stock pretty much every day for the last couple of weeks. And again, hit that subscribe button. This is the stuff we do every day, including these kinds of lessons. So you need to challenge yourself now. And how do I determine what my personal profit maximizer is? How do I allow a stock to move, but also not give back too many profits? There's a fine line between opportunity and managing those trailing stops. And I just gave you 2 examples. One would be a momentum profit maximizer. and one would be a longer term trend profit maximizer. So you need to start challenging yourself now. If you're not in the boot camp, obviously I'm giving you mine. You need to start challenging yourself. How do I determine giving a stock more room to go while at the same time not giving back too much profits? Now, this is also something that we talk about a lot. And this is high level thinking. Again, you want to be here with us, up level what you're thinking, up level the possibilities of what you can do. Big winning traders are okay with giving back some unrealized profits in exchange for a bigger move. You're giving back unrealized, maybe you let it go from plus 2,000 down to plus 1,300 in exchange for the bids coming back to hit that plus 3,000. That's how big winning traders think. Now, that can be adapted to whether you're momentum trading versus trend trading. It could be as simple as letting it pull back on a 5-minute candle. It's the same exact thing, but it's more about the concept. What I'm going to challenge you to think about right now, what is your personal profit maximizer? How in your profit maximizer do you allow the stock to fluctuate? And then how do you first determine what parabolic is? Is it a fast move over 3 days? Is it a percentage move? Is it a percentage away from key moving averages? Is it how many dollars it went over the last couple of days? So is it dollar move, consecutive candles, percentage move? You need to determine, wow, that stock went parabolic. And this is just as important. Do you add to that position based on what we talked about before, order flow and tape reading, or do you let it play itself out? Don't put more shares on for all of the reasons that we build the argument, and then shift into profit maximizer mode. Now, the most exciting part, again, first part is understanding how to set up a profit maximizer. The second part is understanding, is it parabolic and do you want to move it up tighter? And the third part is setting up your software. As I just want to pull that up on the screen again because I think it was that important. Setting up your software so that the software programs do 75% of the hard lifting. And then the last part is us in the community talking about trades. And let's see, Charles is saying, had that issue on open. Yeah, so you can see that. I think we've all had that issue, right? We all need to have that. I mean, raise your hand if you had a trade where you're like, oh my gosh, it was so much in my favor. But like you're sitting back and you're like, how do I manage this? I don't want to screw it up. And a lot of people are having that question right now about plug and ICE and net, which has exploded to the upside. All right. So these are the kind of things, again, I want to challenge you. You're here with me at 7:30 in the morning. Thank you. Hit that like button. I want you to know how much I appreciate it. But I want to challenge you to think higher than where you are right now. I know deep in my heart, I don't care where you are right now, including for myself, there's a higher level. We all have a higher level. The question is, what are you missing to get to that higher level? For some, it's more discipline on the downside, on stop worrying about losing trades, get out and go to the next one, go make it back. For some other people, it might be just finding the ideas in the first place, which again, download this. It's below the link right now. It's below the video right now. Some others, what we talked about today, which is maximizing profits. Push up and pause, get out, push up and pause, add, push up and pause, move up the profit maximizer. These are all questions that move you up to the next level. And that's our mission, whether it's in the boot camp or whether it's here on social media. Hopefully you've been here for a while and you know I really care whether or not we succeed or not. You're obviously here. I love the fact that 7:30 in the morning, some people are here from different countries across the world, 12-hour time zone differences. That shows how bad you want it if you're watching this live with me right now. And if you're watching the replay, thank you so much as well. But I'm telling you right now, the whole theme of what we're talking about today, first we started talking about the bank stocks. If you missed the beginning of this, go back and watch the beginning of the call and how the earnings are unfolding. We reviewed yesterday's JP Morgan. But let's get back to the main topic, which is you. The main topic is you. What is going to fill the gap between where you are right now and leveling up? Is it risk? Is it position sizing? Is it finding order flow? Is it reading the tape? Or that last magic piece, which is you're in a lot of good trades, and then the next step is just learning how to hold those winners longer so the losses don't matter as much. So when we tie that back into what the market has done over the last, let's say, 5 weeks. So let's tie the SPY into this and we'll bring this home. When you tie the market into what the market's done the last 5 weeks and you kept your exposure on the bigger picture a little bit lower, drill deeper into sector specific and stock specific ideas. And again, this is now, okay? This is now. This is the kind of opportunity that unfolds on a regular basis, regardless of how the market's trading. That last final step is understanding how to hold the winners longer, but you need to first understand how to read the order flow and read the tape to put yourself in this position. So I'm not saying that for any other, I'm saying it, I don't want to use a negative in there. I'm saying that because I want you to go and look in the mirror and challenge yourself. I want you to ask yourself, what am I missing? What part of trading is a roadblock for me to get higher? Is it risk, or is it learning how to make more? Is it finding good ideas, or is it learning how to time into those ideas? I have to leave now because I have to head on to my other game plan call, which we have in a few minutes. But I want to challenge you and come back tomorrow, and we'll have a deeper discussion about what some of the roadblocks you are, and we'll do a Q&A tomorrow for Friday. All right? Have an awesome day, everybody. I'll speak to you soon. Thanks so much for joining me. You have no idea how much I appreciate it. If we're giving you some value, smash that like button. I'd really appreciate it. Have an awesome day, everybody.